Okay guys, so we are back with another episode of the backtesting. We're backtesting Euro USD on the 5 minute time frame and with our New York breakout strategy. So from 1:30 to 3:30, we're looking to get our entries, and we've currently completed from March to August. So I think it's 6 months that we've actually tested so far, and we're now in September. So we're looking to get a minimum of 12 months to give us a kind of overall, give us a lot of data, because we are taking quite a few trades. So then once we see how profitable it is over March 2024 to March 2025, then we can see, okay, is this strategy going to work, and should we do further testing with this strategy? So if I take you onto the edge wonk, here you can see the results from the first 6 months. Here is the equity graph, and as you can quite clearly see, it has been quite profitable. Our peak was $25,000 on a $100,000 account. If we just put it in terms of percentage, our peak was around 23% profit, and we're currently now, after August, sitting at 20% profit. So if we show you here the monthly reports, you can see 6%, 1.6, 2.1, break even one there, 12.9, and then minus 3.1. So very profitable so far. And that's why we're going to continue testing this strategy, because if it's working, then why would I not continue trading it? I mean, or actually look to trade it live. That's kind of my thought process behind it. So September 2nd, looking to take some trades. So here we go. This one is a continuation entry. And if you guys are confused about the different ways I'm actually trading a strategy, make sure you check out the first episode, because that's where I go through the full rules and the plan behind this first test period. So we're in this trade, and hopefully we can start with a winner. Would be great. There's a lot of consolidation here, which is kind of crazy. And this one is probably going to lose. Yeah, there we go. Consolidation is never ideal when you're in a winning trade, when you're in a losing trade. I've never really had any good experiences with consolidation, just from my own experience. So this one is actually, it's broken out. So we can buy here. And then, there we go. Place order. There we go, TP hit. The reason we bought here, we obviously had this structure, we broke out the structure, and we trade the trend basically. So then we'll do the same here. Obviously this candle hasn't broken out. Perhaps the next one will. Still hasn't broken yet. Okay, so now we have broken out of the structure. So we're looking to get into the trade here. Targeting a 1 to 2. Save that entry. And then we are in the trade. Hopefully there's no consolidation. We did consolidate for a bit, but then we had an absolute beauty of a candle there that hit our take profit. Currently a good start. Obviously we are only 3 trades into the month. There was news at this candle here. So no news for us for the entry. So we have to enter a short. That's how it works, guys. If your plan says to enter, doesn't matter how it looks, you have to enter. And that's how you have to trade. Ignore your feelings. Focus on your plan. That's kind of my motto. Like I said, we're going to skip this one as it's clearly NFP. New trading is never really a good idea, especially if your goal is to trade with prop firms or trade with larger capital. The slippage can be quite intense. So we are buying here, targeting 1 to 2, and you'll notice that sometimes 1 to 2 looks like a lot, because it is all really dependent on the candle we're entering on. If there's a lot of volume in the candle we're entering on, like this one, then the stop loss is going to have to be bigger, which means the take profit is going to have to be bigger. This one is only 16 pips, the take profit, but it seems a lot bigger because we're on the lower time frame and there's a lot of volume in the market. So obviously this one didn't work. So we can go on to the next one, but that's kind of why it looks different in certain scenarios. See, this one technically this is a break now. We failed to break 2 times, but now we have to enter. Tricky one there. Again, news, as you see down here. If you add this filter here, you can add the filter for the news you actually want to put on. So I obviously had the news that I want, added that on. So now we have it down the bottom here. You see there's news again here, and there's Euro news as well. So put the news for the countries you're trading, and we don't want to trade if there's PPI. So if we're trying to replicate our live trading, if I know I'm not going to be trading news on the live markets, then I'm not going to backtest trading the news setups. So I could enter this one and say, oh, well, I'm going to buy, but why would I do that if I know I'm not going to be trading it live? It doesn't really make sense. And obviously you want your testing to replicate your live trading as I guess as much as possible. Otherwise there's no point in backtesting. So go to the next New York session. As you see, no news on this one. There is news later in the day. Let's see what that is. Yeah, not really any concern of mine. Okay, so this one we are going to buy. Stop loss below here. TP 1 to 2. I feel like I've said that a million times now because of how many times we've done it. But that's what you really want with your testing. You want the setups to basically be almost second nature to you, and it feels like you can look at a chart and see if there's a setup right away. That's kind of the goal, especially if you have a winning strategy. Being able to look on the charts and say, okay, there's a setup, or no, there's not a setup. I'm going to sit out of the markets. That is definitely key. So this one's a short. And you guys will see I don't have to draw any lines. I don't have to have any indicators. I don't have to have any correlation with different currency pairs or different indexes. I don't have to have any of that. I just see price action based on the strategy, and then I will enter according to that price action. There's news on this one. So this one, a sell, because we are continuing with the momentum. As you know, that is one of the ways we enter the trade. There we go, place order. So I don't think this month's been too good so far. You know, there's going to be really good months, there's going to be bad months, and there's going to be obviously break-even months as well. So this one wasn't actually news, so we're going to have to enter here. There we go. See if we can get a little bit of a melt further. Okay, so this one has actually broken to the upside now. So we have to close this one out early. It could go and drop to take profit now, but yeah, stop loss would have hit. And the reason is why I closed it early. When price breaks structure to the upside, if it's in profit, if it's in a loss, doesn't matter to me. I will close the trade and get out. I'd rather make a small loss or make a small profit rather than having a full loss every single time. And if we can reduce the average loss size, then we are doing very well and we're on the right track basically. So this one here, no break yet. Okay, so there we go, there is a break. When I say break, I mean obviously a body close. I don't really care about wicks, to be honest. More of a body focused trader. This month has been very brutal, but it's good to see. We have to know what can happen in a month, because we're taking quite a lot of trades. Then I want to know what I can possibly lose. It doesn't really matter about what you can win, it's about what you can lose. This one's obviously a continuation one. There we go. Because risk management wise, let's say you make 50% in a year. That's all well and good. But making 50% in a year is good if you have a low drawdown too. Let's say your max drawdown for the year is 10%. That's pretty good. But let's say you're making 50% per year, but your max drawdown is 40%. You can't then go in and risk 1%. Because there's going to be a massive swing in your P&L. And as we all know, if you lose 50% of your account balance, you have to make 100% to make it back. So obviously if you lose 40%, it's going to be a lot more than 40% required to actually make back that 40% of max drawdown. So people saying, oh, I make this much per year or this much from my strategy, you need to definitely look into it further. I could make 10 times my profit if I just 10x my risk, but it obviously means my max drawdown will 10x as well. And you have to deal with that as a trader, and it's quite difficult compared to maybe a 5% or 10% max drawdown per year. That's something you need to definitely remember. So this trade here is a long there, stop loss below, oops, we enter. And the beauty of FX Replay is I don't have to go into an Excel spreadsheet and collect all the data for these setups. I can just enter the trades and then export it and import it into Edgewonk, which is obviously my backtesting tool that I use. See, this one, although it looks terrible, there's no news, and based on my strategy I have to enter the setup. So obviously it will give us a good picture of what happens if a candle does have this much volume. Let me just zoom in a little bit. Yeah, that was a loss. Yeah, this month has not been great. I think we are down quite a bit. See, there's news there. We're coming to the end of the month as well, so it would be ideal if we can get back, you know, more profit or even less drawdown. You know, a couple of wins would be nice. A lot of the months we have ended with a couple of wins, so maybe that is something we can also look at. Maybe there's certain times of the month where we just lose, or this one just win perfectly. Okay, so now we are in October, so that is the month complete. So what I'm going to do is I'm going to go to the analytics and I'm going to export the data. Export. Now I'm going to import it into Edgewonk, and we can see that here. Save and upload. So now we'll be able to see the overall results. So let's wait for it to import. It usually only takes 10 seconds maybe. Okay, so equity graph update. We haven't obviously created new highs. We have basically stayed at the same point. I think we were around 20%, and now we are at around, I think it was that 17 or 18%. So it's not too bad. The main thing I have to say about this is the drawdown. The big drawdown spikes have definitely started to reduce. The start of the year, I think this was April maybe, we had this massive 10% drawdown. When I say massive 10% drawdown, 10% isn't actually that bad. If we return 30% in a year, 40% in a year with the strategy, 10% drawdown is perfect. You know, our CAL ratio will be high, and it'd be a strategy I would definitely take live. Obviously, I'm not saying with just 6 months of data, but a few years of data, collecting a lot of more data than just this, we can take it live. But when we're only returning 18% so far, it's not as good. So we can see monthly report, minus 1.78%. I actually thought it was going to be a lot worse than this. I'm actually surprised at that. But if we look and we can go back and see the trades, a lot of losing trades. But the beauty of trading is that you can lose, but still not lose as badly as you would normally because of a good risk to reward. If I was trading with 1-to-1s or a negative risk to reward maybe, this wouldn't be good. But because we are trading with 1-to-2s, it does mean that we are basically making more profit than someone with a lower risk reward, obviously. So you can see here, based on the initial balance of 100k, and then based on the current balance, you can see the changes in the monthly profits. But it's been overall very, very good. Overall stats here, we can see, let's do a percentage. Average P&L, so every time we enter a trade, on average we make 0.16%. That is very, very good. So we can do that, okay, based on 100 trades, you times that by 100, and this is what I, on average, going to make. Win rate, very, very low, 39%. When I say low, I mean compared to a normal 1 to 2 strategy that I've tested previously. Biggest loser, 1%, very good. Losing more than 1% would be a disaster. Max drawdown, 10.46%, like I mentioned, and we average 3.69 trades per week. So it's 3 or 4 of the days of the week we're going to have a trade. That's kind of what I see it as, and that's probably because 1 or 2 days of the week usually have news events, so that's probably why it isn't 5. If it was 5, then it would make sense if there was no news. So we've had 118 trades so far, so we're getting good data. 118 trades, very, very good, and we've done it over I think it's 7 episodes now, and by the 12th episode we will have probably 200, well, definitely 200 plus trades of data, which will be very, very good, and it will give us some valuable data for the viability of this strategy. So I'll catch you guys ready for October.